Don't get technical with me.
But enough of my technical mumbo-jumbo. Allow me to demonstrate.
Well, we always want to have people demonstrating what they know about the market through technical analysis, and I'm joined by somebody who I love talking technicals with. Her name is Toni Turner. She is president of the TrendStar Trading Group. You can learn more about her at toniturner.com, and if you go there, you will learn, among other things, about her books. A Beginner's Guide to Short-Term Trading, A Beginner's Guide to Day Trading Online, both out in their second edition, and Invest to Win. So again, you can get more at toniturner.com. Toni, by the way, with an I. Toni Turner, great to have you back on Money Life.
Thanks, Chuck. Great to be here.
Toni is here on the Gainbridge Hotline. Are you searching for flexibility in your annuity products? Starting in the second year of your annuity contract, you may withdraw up to 10% of your account value each year without penalty. It's another way Gainbridge puts you in control of your financial future. Gain access, gain control, Gainbridge. Visit Gainbridge.life to get started. Toni, as we get started, well, the market has had a lot to react to. Some would say we've now seen another leg down. So are we getting to where we're going to see a bottom in at any point?
Boy, I sure hope so, Chuck. I sure hope so. If you look at the SPY, which is, of course, the exchange-traded fund that follows the S&P 500 index, and that's easy to bring up on your screen. If you look at the SPY, it made its all-time high in January at about 478. And today, Thursday, right now it's trading at 374. So it's 22% off of its all-time highs. And, of course, that's in bear market territory. And we've had a lot of anguish here. But with the Fed raising interest rates and planning to do it more, that's certainly an irritant to the stock market because, of course, interest rates basically run the world. It's the cost of money, and the cost of money, we can say, runs the world. So right now, with the SPY at 374, we're looking at the very, very, very important support low in June, and it was and still is at 362. Anybody who's bullish really wants the SPY to stay above this 362 level.
What happens if we get there? If we break through 362 on the SPY, are we ripping our hair out at that point? How ugly does it get if we breach that level?
If I knew that, I would be on my yacht in the Mediterranean. I have heard people on CNBC and the networks all day long saying, this is what's going to happen and that's what's going to happen. Chuck, I've been in the market for over 25 years. Nobody on the planet knows where the market is going next. So do you rip your hair out or do you start buying? And there's an argument for both of those cases. A lot of it has to do, people forget about their own time horizon. Like if you're 60, 70 years old, what's your time horizon for your investments? You got to think about that. If you're 20 years old and the market's falling like a stone, who cares? You know, it has an upside bias. That's the good news. It has an upside bias. And it could bounce off that 362 or right near that range. And certainly I could see now the SPY is oversold on the 14-day RSI, which I know that doesn't impress a lot of people, but it's an important marker there. And so if it's oversold, the odds are that at least in the short term, it could bounce a little bit within the next few points. If it goes below 362, then we've got to sit and stare at it and see where the next low hits.
Let's point out, if it gets to 362, it will be much closer to the level, you talked about the 22% bear market decline. Getting down to 362, adding that additional decline, puts us a little closer to what you'd expect if we had bear market with recessionary conditions, which, even if it hasn't been declared yet, let's pretty much be honest, we think we have a bear market with a recession right now.
Yeah, right. We're going into earnings season, third quarter earnings season. September is always hairy anyway. Goodness knows we've got everything else on the plate here. Some of the good news seasonally is that in an election year, the market usually goes up. We'll see what happens, 2023. So there could be a bounce here. I worry about people who say, I'm going to buy everything on the next bounce, and that has always worried me because maybe that works and maybe you kind of wish you'd stuck it out a little longer. And nobody on the planet knows where the market's going next.
Since nobody knows, and since you can make a case in both directions, do you do any sort of a split strategy? Are you just keeping powder dry? Are you using options as insurance? For the money that you want to put to work, what's the right way to put it in with some semblance of I'm not just throwing it into a wishing well?
Certainly the paths you said are fine. What I've done is I've wandered into commodities because it doesn't take rocket science. I go to the grocery store. A loaf of bread is a heck of a lot more money than it used to be. So I look at the ETF wheat, WEAT, and I say, well, we all know the prices of food are going up. This is not rocket science. And so I've wandered into wheat and corn, and I'm looking at oil because I think that may bounce again, and I'm keeping quite a bit of powder dry. And then looking at some companies that I like, and I'm holding off to see where the bottom is. There's an advantage to knowing how to read charts, at least in a very basic manner, because then you've got a picture as well as the words, I call it. You know, the fundamentals are the words, and the chart is the picture. So the chart is a help, even if it's the simplest chart of all. I saw something I'll tell you real quick. I was looking at a long-term chart, which I like to do, and I was looking at a monthly chart of the SPY, the S&P Spider. It's the simplest thing to do. Your grandkids can do it. You look at the chart, know that when price is going up, like it has been since 2009, basically hitting that bottom that it hit and then starting up, when it's moving up on a monthly chart in a 45-degree angle or even a little shallower, that's nice. That's sustainable. Then when we look at it, when it hit the lows in 2020, then it shot nearly straight up. When you see an angle that's parabolic and headed for the moon, it is not sustainable. And I don't care what it is. It is not sustainable. And that's what we've had. We've had a straight up, not straight up, but a pretty steep shot higher. And that is not sustainable. People like me take profits. I mean, you know. So there's some simple things you can look at on a chart that will tell you, yeah, maybe I should take a few profits here. Or it goes down really steep. Maybe it's going to bounce then, and that's a good time to get in.
We have certainly seen it bouncing around. Thanks for helping give us some idea of the fact that although it could go either way from here, maybe how we want to play it. Toni, always great to chat with you. Thanks for the time.
Thank you, Chuck.
That's Toni Turner, president of TrendStar Trading Group, author of Invest to Win. Or if you're looking for guides, well, how about a beginner's guide to short-term trading or a beginner's guide to day trading online, both out in their second edition. Get more information about Toni on ToniTurner.com and on Twitter at ToniTurnerTrade. A bonus survey said with Charles Roqueblatt from AAII is coming up. Stick with us.